All right, and we're back. So it's time for the second ever video that I've made to put it out here and do a little update on the portfolio from the first video. Calendar-wise, it's been a couple weeks since I made that first video, but I recently posted it a couple days ago, I guess. So I guess we have the benefit of time having passed to see how things went. I actually did go ahead and implement what I was talking about on that first one. If you haven't seen it, I'd go back and check it out. But yeah, I'm just gonna try and improve on this process. I'm not a marketer, just a CFA guy into options. So appreciate all the likes and the subscribes and requests to get into options autopilot. If you want to do that, the link's below. Got a free course, because ultimately what I'm trying to do is just teach people how to do this, why to do this, even if they don't automate it with options autopilot. It's just good to understand, and make money, right? And as a disclaimer, obviously I can't guarantee you're going to make money. I always hate having to say that. People should know this. But I think it's a good skill and something good to learn to be able to make some money over time. And I do believe in it. It's what I'm doing with my own money. So let's just dive in to my, portfolio on Tasty Trade and back up a little bit. I did put on and take off some trades, and I also wanted to show some stuff that, I feel like some people wouldn't show. Obviously, this looks all great because it's all green right here in terms of everything being profitable. That normally doesn't happen, and that was not the case earlier in the week before the CPI number. I'll kind of go over that in general, but I just wanted to highlight that because this was basically the exact opposite. I think gold was up previously and crude oil, that was it. Everything else was down. I wouldn't say it was down significantly, but it was down and in the red. And especially with bonds, Bitcoin, all that stuff was actually down at one point. And this is, I guess, the beauty of just letting things go. They had not hit their stop losses at all, so they weren't, taken out. Just not messing with it. I actually did interfere because I had an ES trade on here when VIX was spiking that I pulled off, which I should have just let it go and follow the rules. So shame on me for that. But let's go back and see some of the previous ones that I put on since that video. Basically, I think I highlighted in that video that I thought a lot of the asset classes were at good points to kind of put on a trade. And we'll go through some of those here in a little bit in terms of the charts. But basically you can see when we put these on, the next day I put on crude oil, Bitcoin ETF. Again, I'm trading the Bitcoin ETF. I don't know of a way to do options on the futures for Bitcoin at this point. Maybe there is. Somebody can comment if they know. Did do the 30-year bond futures. And then obviously this is just MES, which is S&P. Here's my ES trade that I did. That was on the 10th. And then I ended up pulling it off on the 15th. So I think we went over the weekend, if I recall. Excuse me. And then I think I had like a 40-some% return in 3 days. So I didn't want to be greedy. I wanted to take my profit. And I was also kind of over my allocation limit, if you recall the strategy that I was going for in terms of the allocations. I didn't want to be too high to the S&P 500, so I took that off. I also took off a profit on gold futures and then went a little bit farther out in time. So you can see I put the credit on at 250, and this is a put spread, and I'll kind of go over that, why I'm doing the put spread. The 111 doesn't look very good, or it's not very favorable in terms of your credit versus your margin. So it was just better to do a put vertical credit. And so put on for 250. Then you can see we basically took it off 90 cents. So had a good profit there. It was pretty much at the profit target. And then also immediately did a $4.40 credit. So $440. And I believe we can go in here, see what the margin requirement is. It's a pretty good actual, Yeah, so the capital requirement $1,800. So I mean that's pretty good credit. It's 70 days to expiration. Let me just calculate this really quickly. So 440 divided by 1809. This is stuff that I would say you should do. We're going to add this into Options Autopilot in terms of giving you the potential return on margin, and you can potentially sort it that way. But so that's a 24% return on margin, initial margin requirement, which is obviously pretty good. If you span that over the timed expiration, then that's a very good percentage return. There's no guarantee that it's gonna work out and we're gonna get full profit, but that was just kind of my thought process. So I'm going to go in and just kind of also go over where the market's at, and where I guess it was at in general. Still getting a feel. It's funny because mostly using it Tasty for automation. I don't have to deal with stuff as much in terms of the actual platform, but basically let's zoom in here. I mean, yeah, so I was making the other video right around this time frame, talking about what my thoughts were here. The market did kind of rip and then started to pull back, and now we've had some more up days. Basically, when the CPI data came in, technically I think it was over expectations. I think it was 2.8 versus 2.7 if I recall. But people were maybe obviously looking for more than that, so they thought that there wouldn't be a need to raise rates. Maybe they can still lower rates over time. I think that they're probably gonna have to be on hold for a while, but again, it doesn't matter what my opinion is. One of the phrases that we got to keep in mind is that we don't trade the market we want, we trade the market that we have. You can have opinions on what you think it is. Obviously, that's a reason to take risks and put positions on, but always just have to stay disciplined, which is why it's great to have automated systems in place, or just have a trade plan, right? Just have your trade plan there and just follow it no matter what. So in terms of the market in general, it's definitely seeming more bullish than it was. And we've obviously got the inauguration coming up. We got 1 hour here. Let's go to, here we go, 1 day. So in my opinion, we're kind of still in a downtrend. It might have broken this downtrend. I mean, it looks like it did, but I wouldn't say it's decisively outside of this range enough to get super bullish, but it is maybe a little more positive, right? And I think the general backdrop of having the Trump administration in there is, and we can't rely on this, of course, he has like explicitly stated that his goal is he like measures his success based on what the stock market does. He has said that specifically to Anthony Scaramucci, if anybody remembers him. I've spoken to Anthony at times when I was at Merrill Lynch. Definitely a character, a smart guy, but he has heard that directly from him, right? So I'm going to guess that that's going to continue to be the case. He will want the market to go up, and he's going to do everything in his power to do that. If anyone ever heard of the Bernanke put back in the day, he was the Fed chairman during the 2008 crisis. I mean, they talked about the Greenspan put. I mean, depends on your view on the central banking system in general. But again, we have to go with what we have. But people will kind of say, oh, if they think that they're supportive of the market in general, then it's like you have a put on the market because it's never going to fall too much. Again, I would never rely on that. I think many things can surprise the market, so that's why we always have to stay disciplined. But in general, I'm going to guess we're not going to get a huge pullback unless there's some really unexpected things that happen. That being said, I think valuations are pretty full, and it might get difficult to exceed expectations in the long run. Ben Felix made a good video on performance under different presidents, whether Republican or Democratic. And he wasn't taking any kind of side. It was just like a historical study. And historically, actually, Republicans have been worse for the stock market, except for when Trump was in office the first time. So again, don't know if that's going to happen again, but we will see. Either way, we just got to go with what we know and have our trading plan and follow it, like I said. So here's crude oil. I think when I was putting this on and talking about it initially, this is kind of like a pennant. And I don't get into a ton of technical analysis. I just like to see where there's supply and demand generally. And I think what I was talking about here was that there was a longer term kind of trend line that was breaking, right? I think it was around here. Let's see if we zoom in. Yeah, it was around here. So it had kind of broken. I didn't necessarily expect it to kind of rip like that. And we can see it's now getting close. Well, it did actually touch pretty much a new high. Let's go to the ETF. Sometimes it's a little bit easier to see there. So yeah, I should do this in Thinkorswim just because it will show us. But I would say that's fairly a bullish chart for oil. Now it's coming back and retesting it. Who knows? I mean, if inflation doesn't really pick up, it might be hard to sustain. But one of the reasons I said that I like doing the 1-on-1 on the crude oil and not doing strangles is because you can get moves like this. And if there's geopolitical risk, it's probably going to be to the upside, obviously, if there's issues. So that's why we're kind of selling the downside. And you're getting a pretty good return on margin again. Let's see, crude oil. It's my 1-1-1. You can see I think at the time it was 90 some days to expiration. And here's the capital requirement, right? So we're actually doing pretty well on that position at the moment. It's not quite at the profit target. None of these are. I have them all set at 70%. But you can see that they're getting closer. But like I said, MES was actually negative at one point last week, and then everything kind of rallied. So that's been positive. Same thing with bonds. Again, I thought that they were getting towards the lower end in terms of prices, and yield was pretty high. I think people were kind of anticipating this CPI report, trying to, I guess, get ahead of it or position ahead of it. And it seemed a little bit oversold. Again, anything can go lower, but it just seemed like an opportune time. And actually on Schwab, I did a put credit spread through Options Autopilot, and that was done, I think, before the actual print, yeah. But I'll do an update on that separately. But let's just look at ZB. So it was opportune time to do it. I think I was doing it right around here. Obviously, I didn't know if it was going to for sure go lower or not, but there were some signs of demand there. Then it came out. Obviously, it ripped. That ended up working in my favor. I had all my stop losses and everything in place if for some reason it wasn't going to. And again, it goes back to the plan that I kind of laid out in terms of correlations. If the market started to fall at some point, you would think bonds are going to be a benefit or benefactor of that. So my kind of idea was just that I didn't think it was going to make a new low. If for some reason this did occur, I think that would signal the market's definitely expecting a lot more inflation and maybe even higher rates. I don't think that that's going to be the case unless it really gets out of hand. But again, I'm no macroeconomist, and don't have a magic 8-ball to see what's going to happen. But that's just kind of in my mind. That's kind of how I approach the market, right? It's like, okay, if this, then that. But in general, it's all about being consistent and putting these things on. And I do have that as a 1-1-1. So I guess I can just expand all these. Doesn't really matter. This is a put spread on Bitcoin. We'll go over that in a minute. I think I have 4 total 1-1-1s on MES. You can see obviously different expirations here because they've just been getting put on consistently, a couple at a time sometimes. But let's go over, we covered crude oil and S&P. Let's go over gold. Again, I'm going to do GLD just because it's easier to look at the chart, because in Thinkorswim they kind of seem to string together the futures charts, but in Tasty Trade it's mostly just the contract itself. So, gold seems to be, again, kind of on a tear. I mean, look at that uptrend. I'm not a gold bug. I never have been. But like I said, you just got to trade with the market, and then you're just going with the statistical probabilities. I think that there's more likely some risk to the upside rather than the downside. And that's one of the reasons we're doing, the put spread, right? And if for some reason things really started to break, then we would act accordingly and get stopped out basically automatically. But trend is still intact. It kind of seems like it's trying to continue here, but it's not convincingly moving higher. With the inauguration coming up on Monday, obviously the market is closed. I'll be curious. The market is probably trying to figure out, what is going to happen, and a bunch of headlines will come out. I think I saw that the government might hit the debt ceiling the day after he takes office. So I don't know if that'll be an event. Ultimately, I do think that they need to reduce the deficit. So we'll see if Doge and Elon Musk can come in there and actually do something. Again, this is not in support of one versus the other. Since they're in there, let's see what they do. Hopefully it's positive, or the market views it positive, and we can all benefit. Let's go over Bitcoin briefly. So yeah, I sold the put spread there. That was not working for a while. Interesting there. Obviously, we saw the 100,000 level get captured again. I think it was on Friday. That's what happened. So this was looking kind of bleak, and I think correlation with NVIDIA is very similar. This chart looks very similar to NVIDIA. You got to figure out a way to overlay these things like on Thinkorswim, but so yeah, kind of similar, not exactly, but it definitely still kind of seems like NVIDIA is in a sideways kind of range here. I'm not really convinced it's really going to explode higher, but not that matters. But yeah, Bitcoin seems to be recapturing this. I think people are expecting some more comments around cryptocurrency, or maybe a reserve for the US government. I think it's possible. I believe that, I don't know if this is true, I believe that Trump supposedly bought some type of cryptocurrency. I don't know what exchange. Again, I don't want to misrepresent or misinform. I just saw that, I believe, on CNBC. I don't know if that's true, so someone will have to check and can comment below. But either way, it seems like they're somewhat of a pro crypto administration. Again, I'm not a hater of Bitcoin. I'm not a huge believer. I think the concept makes sense to me in general, as to why it would be beneficial and good as money. But I just don't know how that will play out. But all we can do is just, again, play the probabilities, have a diversified position, because it is technically less correlated, as we saw on the last video from the cross asset correlations. So I'm just adding it as a diversifier. And again, I think that there's support there. There's going to be support there. Again, my opinion might change if this level breaks. For some reason, that means something's changed, at least temporarily. But if that happens, my position will get stopped out. If it falls, if I have it running weekly on autopilot, it will just reopen the position, which will then have captured a lot of the lower move. So it's like we're just kind of moving and averaging down. Because over time, I believe that the trend will probably stay upwards and likely not fall a ton. That's just my guess. That's how I'm trading it. That's why I have it in the portfolio in terms of positions. So, this week upcoming could be fairly interesting. but we'll just see. I just have things running, and if they hit their stops or they hit their profits, they'll just get taken off and put on the next one when they're set to run again. Most of them are set to run weekly or every 2 weeks. So that'll be, interesting to keep sharing. This SGov is obviously just short-term treasuries, and I'm using that to just earn some return on idle cash. I'm only using about 50% of this portfolio, which is one of our test ones. It's real money, but it's basically, what is it at right here? Yeah, I think that we're using I have to add all this. I think we're using like $14,000 or something like that. But either way, you definitely want to cap your exposure overall, just because things can move, right? Oh, let's look at VIX, because that's one of the reasons we do that. VIX is below average at this point. So this is what we're kind of seeing, this spike up. I believe I put the ES position on here on this day. Just kind of expecting a mean reversion, I guess. And we did get it after CPI came out. So that worked out, but that's never, guaranteed. And this is why you kind of want to manage your risk for sure, because again, as we're trying to diversify across positions, so technically only the S&P 500, MES, ES is going to be directly impacted by VIX spike. It's likely going to go across the asset classes a little bit, but that's why we only want limited exposure to one, asset class, because if that spikes, then we can be losing money regardless of the direction of the market, right? Because we are technically short Vega and long Theta. That's just how it works, right? So right here, $221. If we get a 1% spike, we're potentially down that much, right? These were actually working pretty well. I mean, to be honest, I'm surprised that these are all green together. That's not always going to be the case, and I'm sure it'll go the opposite way at times and be frustrating, but in general, we're just trying to make money in different areas, so it's not all tied to, let's say, the S&P 500. At least that's what I'm trying to do. So that is the update. You can see some of these have not been opened. This is the gold one that I opened, more recently again. That already has moved in my favor. So that's positive. Once these roll off, obviously I'll try and do this update weekly, probably on the weekends. If there's nothing really to talk about, I might do it every couple weeks. But my goal right now is I'll be posting other content and hopefully beneficial, educational stuff. So definitely subscribe for that. But I'm also going to be just kind of, again, sharing if we have losses or profits, what I'm doing and how it's basically getting traded. And just my thoughts on it, right? So stay tuned. Appreciate everybody, watching, subscribing, requesting to get into autopilot. We do have the free course there. I like I said, I tried to make it beneficial regardless of whether someone uses options autopilot or not. I want you to be able to do this by yourself. But a lot of people do that and then they don't really help you make money. So we're definitely trying to help to make money as well. So anyways, appreciate it. Hope you guys have a good weekend, good long weekend. Most people, I'm assuming, are off on Monday, and we will see if any kind of headlines come out. Hopefully things go smoothly at the inauguration, and we will check in and see how the portfolio goes next week. Thanks, guys. Talk to you later.